Hi everyone, welcome to today's video. So investing in the stock market has a lot of parallels with UPSC exam preparation. You would have had friends, relatives who would have prepared for UPSC exam. They start with full josh of preparation. First year clear nahi hota, next year drop. Then year after that drop, then year after that drop. So it becomes a nightmarish scenario because you can enter into UPSC exam prep very easily, but very difficult to get out of it. So it's like a chakravyuh. Something similar happens in stock investing also. That very easy to buy a stock, but very difficult to understand when to take a loss and exit or when to book profits intelligently. So as a result, what happens in stock investing for retail investors is that we end up taking a lot of loss. We don't know when to book profits. And yeah, it just becomes a bad scenario. So on this video, what I'm going to do is that I'm going to explain one very simple strategy of profit booking. This is a strategy that I will be personally using and I am personally using. This strategy will apply to a lot of stocks in the market right now. So please listen to this serious video very carefully. This is not an entertainment video. If you don't have time, please come back later. But please hear the entire explanation. Sometimes you guys just watch like 1-2 minutes of video, fast forward karke. Okay, here are 5-6 stocks. Then quickly you will do some action on it and you will end up taking a lot of hit. So please consider watching this video seriously. This is a serious education video. And also this is not a sponsored video. Yes, I have put an affiliate link. So if you want to support this channel, so you could consider opening your Demat and trading account by using that affiliate link. It does not create any impact on you. Whatever money I'll be making through this affiliate, I will use it to run financial literacy program. That will be completely free of cost. For example, I am doing one financial literacy program for kids, school-going kids, which is absolutely free of cost in a 5-star hotel in Delhi. So you can again check more links regarding the same in the description and comment box. Also, if you're a new investor in the stock market, consider using zero brokerage platform. You can use any. The affiliate link that I've put is for Mstocks, which is backed by Mera Asset. You would have heard that they run a lot of mutual funds, vagera. So it's a fairly strong company. So from that perspective, you could consider checking that affiliate link. And also my financial literacy program, which is absolutely free of cost. So with that said, let's move on to the main video. And first and foremost, let me help you understand the point why it is critical. I'll repeat, why it is critical to book profits. So to explain that point, let me do a macro analysis from a long-term perspective of Nifty 50. So for newcomers who are just kind of getting started with stock investing, Nifty 50 means collection of top 50 stocks in India. It represents the stock investing sentiment in India. So it is a kind of a barometer which indicates the health of the stock market. So if you consider a macro perspective, a fairly long-term perspective for Nifty 50, let me show you 3 phases. Phase 1 is from the year 2008, almost February, to the year 2014 May. So almost 6 years. How much returns did the Nifty give? Nifty gave 0% return. Now, why am I saying 0% return? For example, if you would have invested 1 lakh rupee in Nifty 50 in 2008 on this particular date, and if you would have done nothing after that, the market would have danced around, went back low, high, so on and so forth. And finally, you recover that investment back to 1 lakh rupee in 2014. So again, understanding that profit booking is important is critical. Now you'll say that you are showing just an exceptional phase. Not at all. Let me take you to phase 2. So this phase starts from 2015, from almost February of 2015, and it lasts till 2020. That 1 lakh rupee invest in Nifty 50 in 2015, hold it till 2020, 0% gain. Okay. So that is phase 2, that almost 4 or 5 years again gone, no returns. Something similar is happening now. That for example, this is phase 3. This started in October of 2021. And right now we are in May of 2023. So how many months? I will write it down so that you can understand the gravity of it. So 20 months have happened and how much returns have we made? 0% returns we have made. Now you'll say, yeah, then to scam hi ho gaya, right? I mean, this is like a scam. What's the point of investing in the stock market? There is no return that is happening. You have shown us like 3 phases. Saalo nikal jate hain and there are like 0% return that we are making. What's the point of even investing? Okay, so here is the point and here is the trick that you need to understand. And this is a concept that very few people will explain it to you. So consider liking this video in case you like this tip. So see, let's work through all the three phases and I will tell you the profit making opportunity here. So what you would notice is the range. So you need to consider the range also. We have considered the timeline. This is the entire timeline that almost 6 years gone, right? And 0% return. But also consider the range in which Nifty traded. So what is the meaning of range? So range means the bottommost point and the highest point in this zone. So that range comes out to be roughly 150%. So yes, in 6 years, Nifty gave 0 returns, but the range was 150%. So you would have made 145% return if you would have bought everything at the bottom and sold everything at the top. Now you'll say that, okay, this does not happen. You can't time the market. Bottom you can predict, top you cannot predict. 100% agree. You can't do it. But see, we are not trying to make 145% gain. What I'm simply trying to tell you is that, see, the range was 145%. But could you have probably captured like 30% gain? My bet is yes, if you understand this price range movement. Okay, so this is phase 1. Let me do this quick analysis for phase 2 and phase 3 also. And then I will tell you strategy as to how you can capture this range. Okay, so the same analysis for this phase 2 that I was speaking, that almost 4-5 years gone from 2015 all the way to 2020, 0% gains. But what was the range movement, right? So range will start from somewhere here all the way till here. So almost 78% potential profits to be captured. What about this phase 3? That what is the range in this phase 3? So again, you will see that यहाँ पे that range comes out to be roughly 20%. So 18 to 20% is what we could have potentially captured in this phase 3. Now, if you analyze phase 1, the potential upside was 146% range. Phase 2, what was 70-80%. Here, phase 3. Now, if you just eyeball it, 18%, 18 to 20%. So it means that, see, this Nifty movement can go in 2 ways. So one way is that it dances around like this. It goes something like up, right? And a bigger range is created. So you can potentially capture that. That's the first way it could move. Second is कि shoot up hi ho jaye Nifty, right? I mean, it just simply goes up. So both these scenarios, if you know how to handle, you are going to make a lot of money in this phase 3. And that is what is the meaning of bull market. Bull market does not mean that, you know what, ki seedhe the stock market is going to go up like this. And whatever you are investing now, you can easily book profit. Market will not give you that opportunity. It will always scare you. Whenever you are booking profits, not booking profits, you will always feel that little bit queasiness, right? So that is going to happen. So therefore, you must understand how to intelligently time the market. Now, before moving on to the timing part of it and showing you the strategy, let me also address the entire concept of timing the market, because there is this incorrect notion that Mr. Warren Buffett said that you should never time the market. Okay, I'm not trying to criticize Mr. Warren Buffett. Mr. Warren Buffett would have said that statement in some other context. People picked it in some other context. How can I prove it to you? By showing you exactly what Mr. Warren Buffett is doing. So here is the data of Berkshire Hathaway, the company that he runs. And let me show you the cash positions of Berkshire Hathaway in the last 5 years. What you will notice is that back in the last quarter of 2021, he was sitting on $88 billion of cash. Right now, he is sitting on $26 billion of cash, and this is one of the lowest amounts he is sitting on in cash in the last 4-5 years. And you can see this right from all this chart. So even he's trying to time the market, right? I mean, otherwise he would have always stayed invested in कि भाई मैं SIP करता रहता हूँ. I'll just keep on doing SIP. Is he doing it? The short answer is no. He's moving around his cash, investing more when it makes sense, booking profits when he feels that the market is overvalued. Now that is something that you should also do. So comes the natural question that, okay, can you comment a little bit what strategy you are talking about? 100% yes. Now I will be teaching more strategies on my paid member community and on my courses. I do that. There is a special class this Sunday on discussion module where I'll discuss all the profit booking strategies. But one strategy I'm explaining it to you on this video. So let me talk about it. And this is the channel trading strategy. See, in a channel trading strategy, you have a very clear idea what the technical pattern looks like, right? And a channel is getting formed or is it not getting formed? So let me show it to you, right? So for example, if you draw a channel here, this is very clear that this is a downtrend, right? So if you are trading this channel, for example, you buy it here, right? And you sell it here, then it makes sense. And this pattern somewhat got followed, right? So this was a specific channel that got formed. So this is a channel. Now there are three types of channels that can be formed. So this is a down channel, this is a sideways channel, and this is an upward moving channel. So if you find such a thing playing out for a specific stock, specific index, then you could consider running this channel trading strategy. Now, is some channel getting formed right now on Nifty 50? So the short answer is yes, and let me draw it out to you. So it would look something like this. So if you are trading on Nifty 50, all you have to do is that sell here and buy here, sell here and buy here. So this is what you need to do because this channel is getting formed. Now some of you would say that can you take guarantee that this will 100% work? See guys, there is no guarantee, there is probability. You have to go by mathematics, what is likely to happen. Right now there is no macro indicator that something bad is likely to happen. Interest rates have peaked, inflation is under control. So therefore macros tell us that we are net investor as of now. There is a good chance that the market is going to give a run up. Now I can't write it on a stamp paper and give it to you that okay, market is going to move. I can't do it. No one can do it. So anyways, this is called as channel trading strategy. Now see, the problem is that people just understand half of the equation that I told you this channel trading strategy. Maza aa gaya, now I'm going to do this only. No, you have to apply a little bit of brain, little bit of logic and pick the right type of stocks where this should be done. So how do we pick right type of stocks? Okay, so let us understand by going to a little bit of basics here, how this can be done. So I told you, and this is phase 3, what we are analyzing here. So market right now is at 18,600. And here again, 20 months ago, market was at 18,600. Now tell me this, that if you check the performance of individual stocks here in this part 1 and individual stocks here in this part 2, do you think everything is at the same level? Hypothetically speaking, just to help you understand this, let's say that Reliance was at 2,000 rupee. I'm just making up the number. Is it still at rupees 2,000 here, right? For example, TCS, if it was at 3,000 rupee here, is it still at 3,000 rupee here, right? So you need to use little bit of brain here in order to identify discounted stocks. So let me simplify your life and present a list of good decent stocks that have fallen quite a bit in this phase 2 compared to this phase 1, but the Nifty has remained the same. So let me start reading out that list for you. So for example, HDFC has moved by minus 10%. So HDFC was much higher here, and now in this phase 2, HDFC has fallen, right? So this is the first stock on which you could consider doing channel trading. Second key stock would be something like Kotak Bank, right? So Kotak Bank again has fallen by roughly 18 to 20% from this level which existed here. Third stock is Asian Paints. It has fallen by roughly 15%, Asian Paints. Then comes IT stocks. They have fallen by roughly 20 to 30% from this level of 18,600 to now. So am I telling you some toxic stocks here? The short answer is no. I am telling you very, very good, stable, large cap stocks which has a fairly high chance of moving up compared to even Nifty. There, if you apply channel trading strategies, there is a very high likelihood that you are going to make a lot more money compared to just trading this channel. अगर आपको कुछ समझ में नहीं आता है, then okay, fine, this channel is fine. You can potentially trade it. But if you actually go with slightly more discounted stocks here, and the chances are that you are going to make even more money. So now let me tell you one or two short-term bets that I will be taking. I'll be taking a lot more. Again, I will reveal all the commentary in the member community section and for my stock market students. So you could consider joining it, but I will at least explain you the concept here. So consider the case of HDFC AMC. Now I can hear a lot of clicking noises that Akshat, you know what, HDFC AMC has fallen, this, that, okay. Please hear me out for 2 minutes. So take a look at this graphic, and here a prediction was done by AMFI which said that the mutual fund industry is going to go 4x in the next 10 years by the next decade. So which means 10 years, it will go 4x. So this is a fairly high growth rate. This prediction was done in 2019. And what was the size of the mutual fund industry then in India? It was 25 lakh crore. Now we are in 2023. COVID situation has happened, bunch of other different problems have happened. What is the size of industry right now? Well, it is at, as of today, it is at almost 42,000 crore. So yes, this prediction might fall short by 10-20%, but still it will be a fairly large amount. It is given that the mutual fund industry in India is going to go really, really big. which is what AUM indicates. AUM indicates the total size or the total money which is being managed by mutual fund. Now, the more money that they manage, more is the profits that they will be making, one way or the other. That is a simple point. Yes, commissions can be cut, this, that, bunch of other different things can happen. But if they are managing almost like 4x the money, they are going to do well. Now, see this entire commentary in context of HDFC AMC stock as of now. Now, what is the price of the stock as of today? So it is roughly at 1978. When did this price exist? This price had existed back in 2018. So 5 years, 0% return on HDFC AMC stock. Now you'll say कि बहुत ही फालतू का stock है. Maybe it is not able to manage its profits, revenues, sales बेकार होंगी वगैरह वगैरह. So let's quickly take a look at the fundamentals also very quickly. So here is the year-wise sales for the company. Right now it is sitting at highest ever profit, highest ever sales, right? So both are fine. Does it have massive amount of debt? The short answer is no, it is not. At what price is it available? It is available at 5-year-old price in an industry that is growing like crazy. Then why do you think that HDFC AMC is not going to achieve its previous high? And if it goes to its previous high, you're almost going to make 100% money on a fairly stable stock, so to say. Now you will say that, okay, no, this is not a stable stock. It fell by a lot. See, anything can happen. I'm not saying that HDFC AMC cannot fall. This is a risk that we take. And sometimes our bet can go wrong. But whatever bet you are taking, it should be taken sensibly. So this becomes a great candidate for doing channel trading. So how will you do channel trading on it? So, okay, so if you actually understand the support and resistance line, this is a very important resistance line as of now. And this is a very important support line. So this becomes a channel, right? So there is a very good likelihood that the stock might move in this channel. And then if good news comes or something good happens with the stock from a news perspective and suddenly people start trusting the stock more, then it will move to this channel, right? So then you can trade possibly this channel also. Right now it is at the low end of this particular channel. So this is where I will be building some of my more positions on HDFC from that perspective and will trade this. Now this is not being seen in isolation because the entire AMC industry is going to get pushed. What other stocks will benefit from it? For example, take a look at CAMS. Now something very similar is happening with CAMS also. Now this again is a very important resistance line and this is a very important support line, right? And it is just started to enter this channel here. So what can you do? So if you are buying it here, you can literally trade this channel if it moves in this zone. Now this is again a good 15-20% range to be captured. And that is how by trading the channel intelligently, you can make a lot of money. Now this is just one technique. There are multiple techniques that you need to keep in mind. And again, go back to those 3 phases that I was explaining, that people who just keep on doing blindly SIP, yaar, mahine mein paise aaya, I'm just going to put it in SIP and I'll wait and I'll forever keep on investing. Now that is not the right way, because if you keep on doing SIPs blindly, then you are going to miss out on a lot of gains, the way that I explained. So important key takeaways from this particular video, that number 1, please learn how to trade the channels. Number 2, please understand that just doing blindly SIP is not going to work out for you. You need to intelligently time the markets, learn different techniques as to how you can optimize your portfolio, how you can intelligently buy stocks, figure out when things are at a discount. And 4th and finally, please do not only depend on technicals, because technicals break down completely. It needs to be backed up by macros. It needs to be backed up by fundamentals. As a next step, if you want to learn more about stock investing, please consider watching this video where I have explained how to intelligently design your portfolio. This becomes a very important point because it allows you to build hedging strategies as to whatever you are buying. Unless you learn how to cultivate a portfolio, you will not be able to nurture a big enough portfolio. I hope you enjoyed this conversation and I will see you the next time.